All right, let's do some more of these moves here because it's interesting. So, Kevin, you trimmed Deere, sold to Weiss, who bought Deere again. Tell me why you trimmed it.
Well, I think
before Weiss tells me why he bought it again.
I think we both win on this trade because I think it's down about $10 from where I sold it, and he's coming in and buying it. We only took a little bit off the table. I thought the earnings were a lot less impressive than we had expected. Caterpillar had knocked it out of the park. Deere just came in a little bit short. We still have a 2% position. It's the first time we've had Deere and Cat at the same time, but Cat is crushing it. I mean, it's up 11% over the past 3 months. Deere's down 7%. Good to buy low, so I'm not criticizing it. I'm still an owner, but for us, it just disappointed. I'd rather be a little bit heavier in Cat, a little bit lighter in Deere.
Okay, so Weiss, what is it? What's the fascination for you with Deere? Why in, why out, and then you buy it again?
When you've been doing this for a while, and I'm sure they would all agree, there's certain stocks that you sort of have a really good feel for. So I have a good feel for Deere. I don't make money in it every time, but way more often do I make money than don't. So for me, it's a trading stock. It's cheap. It got cheaper. Actually didn't get cheaper because the earnings came down even though stock price came down. So it's no less expensive, but the trading band used to be 370 to about 410, and I played that. Now I think the trading band's got, moved on the down end, and I think that because of that, and by the way, you had a phenomenal call on Cat. I remember when you bought it, and that just exploded. And it pissed me off because I didn't buy it. But in any event, you've had this. You've had people just say, I've had enough. Stock cereal is a performer. It's not getting it. Inflation is down. Food inflation down. Farmers' rates are up. Et cetera, et cetera. So I thought there was maximum negativity in there to trade it. So I'll be there for a little bit. I still think it could move up in this kind of market, and then I'll sell it and wait for it to come back down.
Josh mentioned yesterday Warren Buffett and Amazon. To me, Deere is really a Warren Buffett stock. And if you continue to see Deere cheapen up like that, to me, that's the type of stock you see Berkshire come in and buy.
So let's look at JP Morgan too, Kev, because you trimmed half the position was called away. Okay, I mean, this stock has been at a high. And by the way, we're super excited. Jamie Dimon's going to be on this program on Monday. It's an exclusive, chairman and CEO, of course, of JP Morgan. So we'll get that promo out loud and proud, and I can't wait for that. But why? Tell me about the stock here.
Yeah, happy to get my stock called away so you could work that promo in.
Yeah.
We covered calls on half of our Cisco position, half of our JP Morgan position. I did not want JP Morgan to get called. I did want Cisco to get called. When you write options, sometimes this happens. We had both positions that had been covered called away. I will look for any weakness to get back into JP Morgan. At 12 times forward earnings, I think it's the best of the breed. It's a stock that I feel has benefited from the financial crisis in the regional space. This is a company that has increased their dividend by 10% a year for the past 5 years. They have very little debt, if any. And if you're going to be in financials, I think you want to own best of breed.